3 out of 5 online shoppers now belong to Tier 2 or smaller cities.
Walmart-owned Flipkart is now fending off a threat from a new arrival, SoftBank-backed Meesho.
The most downloaded shopping app in India isn't Amazon. It isn't even Flipkart. It's Meesho. In fact, in 2023, Meesho became the first Indian shopping app to cross 500 million downloads. And now, this Bharat-first zero-commission social commerce company is going public. Meesho didn't just build another e-commerce platform. They built BharatCommerce. While Amazon and Flipkart chased premium metros and high-ticket customers, Meesho focused on something everyone ignored: India's Tier 2 and Tier 3 population. No commission from sellers, no warehouses of their own, no complex seller onboarding. They simplified commerce for everyday Indians and restructured their entire US-led model into a made-for-India ecosystem. Meesho started with a simple insight. A housewife in Kanpur could become a full-time reseller on WhatsApp without holding any inventory. They started enabling women in small towns to earn by giving them catalogs, supplier backends, and margins. The company scaled fast because it worked on the most viral channel of all, WhatsApp forwards. But they did not stop there. They pivoted from being a reseller platform to a full-blown marketplace, with 80% of orders now coming directly from customers. Let's talk scale. 140 million annual transacting users, over 120 million product listings, 80% of Meesho's customers come from Tier 2 cities, and over 1.3 million sellers onboarded, mostly SMBs and micro-entrepreneurs. Meesho processes over 3.6 million orders every single day. That's more than Flipkart and more than Amazon. By order volume, it's India's largest e-commerce platform. And here's the kicker: it's not burning through VC money to do this. In FY24, Meesho became the first horizontal e-commerce platform in India to turn profitable. Not just EBITDA positive, Meesho is now free cash flow positive. At a time when the biggest names are tightening belts, Meesho's already crossing the profitability bridge. If you're wondering how a 0% commission model works, here's the blueprint. Ads that sellers pay to promote themselves on the platform. In fact, Meesho's ad engine is becoming one of the highest margin businesses. The Meesho Mall, a curated shopping zone of verified sellers that balances quality with scale, driving repeat purchases from higher intent buyers. Valmo, Meesho's in-house logistics arm. Think of it as their own delivery built to handle scale, lower costs, and boost delivery control. Each of these layers is owned by Meesho, and that means more control, better margins, and lower dependency. And when you're already the most downloaded app in India, every small monetization layer adds up really fast. Meesho began in 2015 with a clear idea: empower small sellers, especially women, to build businesses from their phones. IIT Delhi grads Vidit Atre and Sanjeev Barnwal led the charge. Vidit became the face of BharatCommerce. No commissions, no frills, just trust and scale. Between 2015 and 2021, Meesho raised over 1.1 billion from the who's who of venture capitalists. Sequoia, Y Combinator, Meta, yes, Facebook directly invested, SoftBank and Elevation. Eventually, Meesho hit profitability. Not one quarter fluke, but a full year PAT positive. Founders stayed, core team intact, no pivots, no distractions. And now, with a 10,000 crore GMV engine and a tight India-first playbook, Meesho is IPO ready. The question is, can the same founders who cracked Tier 2 India now win over the Lal Street? Asset-light, capital-efficient growth. Unlike Flipkart or Amazon, Meesho owns zero logistics, no inventory, no warehouses. That means lower fixed costs, and because of their Tier 2 plus focus, customer acquisition costs are lower. Their app engagement is off the charts, with average monthly user time higher than any other shopping app. All of this shows one thing: this isn't just an e-commerce bet, it's a bet on how India shops next. Now let's get to the hard numbers. In FY23, revenue was 2,848 crores, the net loss was 3,251 crores. But here's where it gets interesting. In the first 3 quarters of FY24, revenue jumped to 4,000 plus crores. Losses fell by 90%. In fact, they reported a profit in the last 2 quarters. Meesho is moving fast towards profitability, and they've done it while still growing. This isn't just another IPO. It's India's first horizontal e-commerce IPO. Flipkart is owned by Walmart, Amazon as well, Amazon. But Meesho, it's India's own and it's going to be listed on the Indian stock exchanges. For Indian investors, this is a first-of-its-kind opportunity to buy a full-scale, digital-first, Bharat-focused commerce business. So here's what we know so far. Meesho has filed the DRHP with SEBI. It's aiming to raise 4,250 crores via fresh issue. No offer for sale. Existing investors aren't exiting. It's a pure fundraise to strengthen the balance sheet and invest in growth. The expected valuation, $3.5 to $4 billion range, no debt, no messy exits, just a clean raise for the future. But the big question is, should you apply? That depends. This is still a high burn, growth stage company. Margins are razor thin. Competition is fierce, but the signals are strong. Clean balance sheet, profits in the last 2 quarters, and backed by top-tier Indian VCs. So if you believe India's next e-commerce wave won't be about same-day delivery in Gurgaon, but about bringing commerce to every small town in India, then Meesho might just be the pick. So what do you think? Is Meesho the next Nykaa, or is it more like the Flipkart, IPO ready but held back by scale? Drop your thoughts in the comments and tell us, will you apply for the Meesho IPO?